What's up guys, my name is Nick and welcome to my channel. In today's video, I'm excited to share with you another update to my free options trading journal. I had a number of requests for additional functionality and today sees the release of the third iteration of the spreadsheet. For those of you watching this, having not seen the prior versions, don't worry, there's a recap of the basic setup and order entry in the first part of the video. For those of you keen to jump ahead, I've included timestamps in the description that will take you straight to the instructions and an overview of the latest modifications. Before we get into it though, do me a huge favour, smash the like button and subscribe to the channel. It's free of course, but it helps me out a ton. Thank you. And with that said, let's get straight into the version 3 of the Option Alchemist Options Trading Journal. Cheers. So once you click on the link in the description below, you'll be brought to this page. Simply click on Make a Copy. It'll then duplicate the Google Sheet and put it in your own drive. Okay, so once you've got that copy to your own drive, you should be presented with a screen exactly like mine here. The first thing to note is that I created this on rather a large monitor. You may need to adjust the size of the screen if you're looking at a smaller display. If you go up to here to View, you can simply change the zoom functionality. Smaller numbers, obviously, you'll be able to see a better part of the screen. Okay, there's just a couple of inputs that you need to actually update. The account name, you can just change it obviously to Roth IRA or whichever broker you're trading with. It's not relevant to the functionality of the sheet, so less important. You do, however, need to input the initial account net liquidation value. So this is the starting value of account. Plus you also need to input the current period start. Typically this would be like the first day of the year, the first day of the quarter, and so on. This is important because it's basically measuring the rate of return and annualizing it based on the number of days that you've actually traded and then comparing that to the performance over a 365-day period. All the other metrics that you see on the screen are calculated based on the information in the trades that you put in the blotter down here at the bottom of the screen. Now, I've got a couple of example trades I'm going to show you so you can see how that works properly, but for now let's not worry about that. So just two last things before we move on to actually entering some examples in the blotter. It's just these buttons, the sort by trade ID number and sort chronologically. These buttons trigger macros that sort your trades. I'll show you how that functionality is useful in a little bit. You need to enable those macros though. When you click those for the first time, you're presented with a warning message. You need to allow the macros to actually run within the sheet. This is only on the very first time. On subsequent occasions that won't be necessary. Okay, let's get into some examples and let's see some of the functionality actually at work on the sheet. Okay, so in order to save a little bit of time in the video, I've entered 3 trades and 1 adjustment. And we'll get to see exactly why that's important later. Okay, so trade number 1, so 20th of November, and we enter a short iron condor position on UNG. We assign a trade ID number, the trade date, UNG is the ticker of course, +1 denotes long 1 contract, -1 short. The expiration date, of course, you need to input. DTE, the days to expiration, is calculated by the sheet. It just simply takes today's date and takes the difference between that and the expiration date. You need to input the strike of each of the options and whether the option is a call or a put or it's a stop position. You simply select that from the drop-down menu. These are the prices that traded, the option premium prices, or the stop price in the case of a stock entry. The latest mark is simply where that particular option closed today, or if you actually bought or sold an option back, then that would be the closing price and a date close would be associated with that transaction. If we move to the right of the screen, all these variables here are calculated, the days in the trade, the profit and loss and the returns. In fact, any square that has any sort of colored background is one that you won't need to enter, okay? The volatility metrics, I just like to note where IV rank, IV percentile, and the absolute levels of implied volatility are at the time of trade entry. Okay, under position type, clearly these 4 lines simply represent long call and long put positions, short call, short put positions, but collectively they form a short iron condor. Okay, it's not necessarily obvious looking at just a single line, so I always put this in so it's clear if it's part of a larger position. Under the trade notes here, this is an important section, okay? Include notes on your setup and entry year details. What are the deltas on your short options, for example? Why did you choose the expiration that you chose? What profit targets do you have? What's the maximum risk for the trade? How will you get out? Do you have your stops in place? What will your profit-taking exits be? All these things you should note prior to entering the trade. Okay, so on the 21st of November, we have our second trade, trade ID number 2. It's a long call on American Airlines. It's a 12-strike call. We pay $2.20 for it, and it closes the day up at $3. Again, the same metrics are calculated, and I would encourage you again to go through and input the relevant trade notes for that position. On the 22nd of November, trade ID number 3, it's just a purchase of 5 long SPY stock. The reason that I've included this basically is to show you that with a stock, obviously expiration and option strike are not relevant fields, so you should leave those blank. Don't put anything in these fields, otherwise it affects the calculation for the profit and loss of a stock position. Notice also in our pretend scenario here, our iron condor position, the downside is tested, and as a result of that, the call spread, so that would be the short 11.5, long 13 call spread, goes to just 2 cents, and we buy that back. Okay, so it's the 22nd of November, we enter the closing date here. Come the opening next day then, we're going to sell another credit spread, another call credit spread on UNG. Obviously we're going to roll the position down there, the strikes will need to be low. So what we're looking at here is the short 9.5, 11 call credit spread, which will now convert this iron condor into an iron butterfly. Now importantly, this new credit spread is still part of the same initial iron condor trade. It's an adjustment. We've bought back the original short call credit spread, and we're selling another lower strike credit spread. Okay, so this adjustment is part of the original trade, so it's labeled with the same trade ID number. If we go back to the sort by trade ID number just here, we can run the script and it reorganizes these, so now you can see that all trade ID number 1s are all located together. And this is useful because we can now see more easily what the actual net profit or loss on that trade potentially is. So for example, if we go over to the profit and loss column and drag this down here, you actually see in the bottom here, you can see the net sum of the total of all those 6 trades. It's minus $15, so of course this trade is actually running at a slight loss right now. Similarly, if we go back up here and look at the number of trades, for example, we can see despite the fact that there are 8 entries in the journal down here, the spreadsheet recognizes that there are only really 3 trades. So it considers the iron condor, this loser, as one separate trade, and that's what this $15 loss is right here. It happens that we've only got one loss, it's losing $15, that's not only the maximum, it's also the average. If you then want to return to a chronological listing of your trades, simply click the sort chronologically button, and again it puts them back into order by trade date. Okay guys, that should just about wrap it up. I think that covers most of the basic functionality. If you do have any questions though, of course, please feel free to drop them in the comments section below and I'll take a look there. Cheers. Okay, so now you're clear on the basics, let's take a look at what's new. So, since version 1, version 2 was upgraded to now include live quotations. This doesn't need a lot of explanation, suffice it to say that the latest mark is now pulled into the sheet for both stock and option prices. The formatting is important though. Provided you stick to the appropriate date formats I've highlighted in each column, you should be fine. I'll include a link to the video covering a complete explanation of the version 2 upgrade if you want to see exactly how that functionality works behind the scenes on sheet 3, the IMPORTXML Datasheet. Some people want to understand it and some people don't. I get that, and it's certainly not a prerequisite to using the blotter. So in the latest version, version 3, you can now add monies via the account additions entry here. Any values entered here will be included in the current account net liquidation value, but will not affect the overall portfolio returns. So as you can see, the initial account liquidation value is $10,000. There's $2,000 removed, and so the current account net liquidation value is lower as a result. But you'll notice that this 20% withdrawal from the account doesn't affect the current portfolio returns. Similarly, you don't boost the percentage returns when you add funds to the account. Okay, commissions are now also included. So you simply enter the total transaction cost for any single trade. Okay, the spreadsheet then calculates the net cost of the stock or option as a result and compares this to the latest mark to calculate the profit and loss and the percentage returns. Okay, so we can see here 100 contracts at SPY, the overall commission fees were $10. So this increases the net cost of buying the stock from $380 to $380.10. Obviously as brokerage rates improve, so the net cost is reduced as a result as well. Similarly, if you do larger transactions, these are going to have a smaller impact on the net cost per stock. Right, let's just put that back. Okay, so finally, I just wanted to break down a couple of transactions. I've had a lot of questions about how you account for exercise and assignment, both cash secured puts and covered calls. So let's just briefly run through that. So the first thing to note is that, as we discussed even as early as version 1, the important thing is that all trades, all transactions, no matter how complex they are or how many legs they have, all consist of either long or short stock, call or put options. Okay? The important thing is to use the trade ID number to group trades so the spreadsheet recognizes they're part of the same thing. So in the case of a covered call consists of a long stock and a short call. Okay, in the example that I've used here, labeled it trade ID number 1. It's long 100 shares of SPY at $380 a share. As you can see, the net cost of that is 0.1 once commissions are included. And a short 390 strike call, okay, which expires in 3 days. Okay, the price, the option premium that was received for the short call sale was $1.60, $1.59 minus fees, and it's currently being marked at $1.31. Notice that I've also included a note in the tab here to reflect that this position is a covered call. And of course, as I said before, the trade ID tag numbers group them together to show that they are part of the same trade. Okay, now in the event that the stock rallies, okay, through the call strike and you are called away, the way you account for that is as follows. Okay, we're going to override the latest mark and add a close price now. Okay, so the price that your stock gets called away at is the strike of the short option. Okay, so that's $390 per share. Okay, how do we account for the short call? Well, you get to keep all of that premium. So regardless of where it closed, the final closing value of the call option is 0. Don't forget to add, that'd be the 26th, excuse me, 21, 2, 26, 21. Okay, and that position is now closed and appropriately accounted for. Okay, also let's take a look at the short cash secured put. I've taken the same strike here, the 390 strike. You can see that we've written this put option for 450. It's currently being marked at 404. Let's now jump ahead to the expiration of 26 and assume that in this case, okay, the stock actually remains below the put strike, and so you are assigned stock. Okay, so again, it's the 26th. We're jumping ahead in time, of course. Okay, and the value, the mark of that put option is now 0. Okay, but you account for that by being assigned stock at the strike price. Okay, so any gains that are made, any excess gains that are made from accounting for the options at 0 are taken out or added back into the stock price. Okay, I hope that makes sense. This position, of course, is not closed since you are now actually long. You're actually now long the 100 stock. I've also had some questions about the ability of the spreadsheet to track collateral, buying power reductions and so forth. Look, it was never designed for that purpose. Okay, so I have no intention of adding these complex metrics that would be required to take it to that level. Okay, it was simply designed to reflect your returns in your account and give you some simple metrics on your rates of return, number of winners and losers, the size of your winners and losers, and so on. Okay, and I think it does that very well. Again, as I say, there's no intention for me going forward to include those metrics. They're way too complex for what this sheet was designed for. If you do, however, have suggestions for other additions to the sheet, please do let me know in the comments below, and I'll be more than happy to take a look at those. Okay, thanks for your time, guys. And with that said, cheers. Guys, if you made it this far, you made it to the end, and I'm incredibly grateful for your support. If you enjoy the content I'm producing, please do me a huge favor, subscribe to the channel down here. If you're not quite convinced yet, that's fine too. I've put up some more option-related content you can watch by clicking somewhere over there. With that said, take it easy, guys, and I'll see you on the next one. Cheers.